Hi, and welcome to this fireside chat with the founder and CEO of McGill and Partners, Steve McGill. Hi, Steve. Thanks for joining us. I can see you back in your office.
Charlie, I'm not only back in the office, but delighted to be back in the office. I'm in the Leadenhall office, which is the first floor of the Chubb building, and this is week 2 of being back in action. So it's great to be here. Also a little bit strange because, as you well know, the city is a bit of a ghost town at the moment. So, it's not what I'm used to, but it's terrific to be here.
Oh, glad to hear it. Well, look, we've got so much to get through during our time together today, so I'll just crack straight into the questions if you don't mind. So, big philosophical one to start with. How does the current market situation that we've got today with COVID, with the working from home environment, with the hurricane season that we're finding ourselves in, and obviously the market dislocation with rates rising, how does this compare with other markets that you might have experienced before?
It's pretty unique because I would also add in to the list you've provided the biggest structural change in broking history that is on the horizon, being the Aon acquisition of Willis, two phenomenally successful firms coming together, which looks like it's ratified by the shareholders of Willis and Aon on the 25th of August, so last month, and that looks like it's going to become a reality in the first half of 2021. So you've got that in a way to sort of, for us in the broking industry, to look forward to, because it creates opportunities. But in terms of the market environment, it is unique. I mean, the market was somewhat challenged before COVID. Rates were beginning to move up. You only needed to look at some of the challenges that the industry had, which have been very much profiled by your publication, but including, social inflation coming out of the US, cat losses. Again, if you look out of the US, tornadoes that used to be unusual events have become very common events, and it's probably wrong to call them cat in the sense of unusual individual events that don't happen with a frequency. Tornadoes have happened with a frequency that has been profound. I mean, you've had, I think, significant frequency of tornadoes in the last 2 years that in the US have been greater than tornadoes that have happened in any decade going back 100 years. And then, of course, as you appreciate, you've got the above average hurricane season that's expected, and we're right in the middle of that. And normally Monte Carlo, I think the 11th of September, not only do you remember it for 9/11, but also it's around the peak time of the hurricane season. So you have that as a backdrop, and then you throw in COVID and the knock-on effects of COVID for the insurance industry. The challenges are unique, and the market is hardening inevitably in specialty insurance and reinsurance. It's now hardening at, I'd say, double-digit increases in rates that have been getting progressively higher as you've been going through 2020. But with COVID losses on the horizon looking like they could be, if you listen to, key leaders like the Evan Greenbergs of Chubb and John Neals of Lloyd's of plus or minus $100 billion, you've got the biggest loss in the history of non-life insurance, on top of a pretty challenging environment for underwriters, and that creates a really challenging environment for clients. And clients, a lot of clients have to contend with the challenges of COVID on their own businesses, and a lot of them are having to look to preserve cash to manage their cost base. And so that dynamic is happening at the time that insurers are looking to push up rates. And for the first time, this is a market that is hardening more consistently globally and across every segment, pretty much practically every line of insurance, every industry segment. And it's unprecedented in its breadth, depth, and scale. It's something I haven't seen in my 40 years in the industry. And combined with that, all the challenges that clients are having in navigating through COVID, you've got the biggest disconnect between client expectations and what carriers are trying to do, probably that there's ever been in the industry on a global basis. So the environment is incredibly challenging, and you know, from McGill and Partners standpoint, absolutely underlines why the firm has been formed, why we're focused on, you know, deal making and structuring the most effective deals for clients, and why a business led by practitioners who are deeply ingrained in building relationships either with clients and or carriers with deep technical knowledge and creative broking skills, why that boutique specialty firm is actually a firm that is really appropriate for this moment in time in the industry.
That's a great overview, thank you, and leads me nicely onto the next section that I wanted to talk to you about. You know, you mentioned that obviously that there's a huge amount of broker consolidation going on at the moment. Aon Willis, you know, is obviously the big headline grabber. Just talk us through what you think the opportunities are for a boutique firm such as McGill and Partners, but also, you know, the impact that broker consolidation might have on cedents.
You know, when I was looking at the planning out the formation of McGill and Partners, which was in 2017 and 2018, I saw an opportunity to go deep and narrow around, you know, specialist broking expertise. And that was in an environment where the three things I'd highlight. One was the market environment was sort of soft, heading towards stable in terms as far as clients were concerned. Secondly, that predated the Marsh acquisition of JLT, which was announced on the 18th of September 2018. And thirdly, it predated Aon acquiring Willis, which was announced on the 9th of March this year. And so I looked at the formation of the firm as very, very compelling in terms of filling a gap in the market that I felt was much needed. And I felt when you looked at the opportunity, clients wanted choice, carriers were concerned about concentration risk, and they've got phenomenal relationships with major high quality global broking firms, but they wanted to see alternative distribution. And I think talent also were also keen to look at alternatives. And from my standpoint, I felt that there was a lot of activity around, as you well know, Charlie, M&A in the industry. I mean, it's been a key theme for the last sort of 15 years in the industry, and it's been accelerating. And, you know, my thesis was actually an acquisition strategy is very compelling, but nobody's really done an acquisition strategy at scale in the way I felt we could and should do it. And I felt talent acquisition strategy would be a really compelling thing to do. And so rather than following the herd and sort of going left and pursuing what everybody else has been pursuing, which is buying up companies, banging them together, stripping out cost, and successfully building a business, why don't we actually go right, do a really thoughtful acquisition of talent at scale, and build a firm that way without any of the legacy, and build a firm really focused around specialization. And so, you know, I was very compelled by the opportunity. And I have to say, sitting here in 2020, everything I've seen of the changing landscape has completely and massively validated the original thesis, and the thesis around which a world-class financial sponsor like Warburg Pincus would put up a significant amount of capital to support the venture.
Okay, I mean that's great, and you talked obviously about the mass acquisition of talent that McGill's gone through. I think it's a really interesting point to delve into a bit deeper, because, you know, broker startup hiring activity has in some quarters spawned a degree of litigation, shall we say, from aggrieved former employers. But McGill and Partners appears to have largely avoided all of that. So it would be great if you can kind of shed some light on how startups might avoid this type of legal entanglement.
Well, there's a number of comments I'd make, and we're very pleased with the fact that you know, we've hired 235 colleagues from across the industry, particularly in London, actually from 56 different firms, and we have not been subject to any litigation. And I'd say there's a couple things that that we believe are absolutely paramount in our thinking in this regard. First of all, colleagues that come in to the firm have, most of them, dependent on their seniority, have contractual obligations to their existing employers. And the important thing is to respect those obligations. And if you have non-compete conditions for a period of time, step number one is absolutely adhere to your contractual obligations to your existing employer. We have been really rigid in insisting that colleagues that join this firm respect their obligations. And there are many things that colleagues can do when they join the firm, beyond, you know, worrying about clients where they may not be able to work with those clients for a period of time. There's masses of opportunities. And so we've been very diligent in stressing to colleagues that they should meet their contractual obligations. Point number one. Point number two, you know, we actually, just to remind everybody, we had a checklist that was done by Clyde & Co, our legal firm, on the do's and don'ts, just to keep everybody, you know, up to date and remember what needs to be done. And third, I'd say it's the tone at the top. It's the leadership, not just of myself, John Lloyd, Carl Hennessy, other colleagues, around what we expect and the standards we're looking to adhere to. And you know, the other dynamic is, this is a very competitive world, whether it's larger brokers or smaller brokers, whether it's my old firm, Aon, for example, and actually being respectful of your competition is also another element of McGill and Partners, which is, we recognize that many of these firms we're going to have to work alongside as we're building our business. And so, you know, we see the strengths and capabilities of those firms. We respect them. We want our colleagues to respect the way they operate. We want our colleagues to join McGill and Partners in the right way. And we want to build a business for the long term. And I think clients respect that situation. They don't want to get embroiled in litigation. Carriers certainly respect it. And we just think that is a sensible approach for the long term. You can never say never. It may happen, but we're certainly proud that we've managed to recruit certainly the biggest recruitment and acquisition of talent that's happened in the industry, and we're pleased that that we've managed to, you know, not have the litigation that seems to be the common theme in the industry right now, following a lot of other people.
That's great, thank you. You touched on leadership and that being driven from the top, and the culture of McGill and Partners being one of respect. And that's, for me, I think one of the major talking points when McGill and Partners launched initially was the emphasis that the firm puts on getting that culture right. And a lot of the pretty standout differentiators that your brokerage has when it comes to their HR policies and how the firm considers work-life balance in particular. So, without sort of going through the roster of all of those good stuff, I just wonder if you can talk us through what you think the industry's remuneration and HR policies look like today. Have they kept pace with the changing world? And if not, what more does the industry need to do to make sure that we retain some of the talent that's in it?
Well, I think it's an evolving picture, and thank you for the kind comments, Charlie. I would say that from our standpoint, we've been very vocal and sincere and genuine that the assets of the firm are the people in it. And if you have high quality colleagues joining a firm, you can build a culture that really drives excellence in meeting client needs, in looking after our talent, and in building shareholder value. What I would say is that we're constantly learning and we're constantly evolving, but we felt that developing what we call our contracts of trust, which are pretty groundbreaking, which we launched last year as we were launching the firm. This was based on feedback we had from the talent we were looking to recruit and evolution developments in the industry. And we felt actually trusting colleagues to do the right thing and actually enshrining it around a contract that has no defined working hours, no defined holiday, maternity leave of 12 months fully paid, and paternity leave of 6 months, and carers leave. We actually felt if we could create a contract of trust, it would naturally help us attract quality people, not only attract quality people, but a diverse workforce of talent. And little did we know that, having a contract of trust like that would be so relevant when COVID hit and we had to trigger our crisis management plans like everybody else did in the second week of March and all work remotely. It's extraordinary how that particular approach has paid dividends. I would say in terms of the industry generally, long way to go. I think there's lots of positive intent, but the devil's in the detail. And I think we are passionate about how we build a business that is a diverse and inclusive business in a way that is going to be beneficial for us for the long term. And I'm excited that 50% of the company are millennials, and that at the sort of associate level and below, 50% are female. And we want that roster of diverse talent. We want to continue to amplify and accelerate that, because we think it's in the best interest of our business, and we think it's going to be in the best interest of serving clients.
That's great, thank you. I'm conscious we've only got a couple more minutes left, Steve, with our time together today, but I'm keen just to get a sense from you, perhaps a little bit of a philosophical question again to end on. But what do you think the reinsurance broker market of the future looks like? Is it one that is all singing, all dancing shop from cradle to grave service? Is it something that focuses on open API frameworks and uses technology and innovation at its center? What do you think the reinsurance broker market looks like in 10, 20 years' time?
Great question. I think the reinsurance broker market is going to be a market that is reflective, first of all, of the power of concentration, with now Guy Carpenter on the Marsh side and Aon and Willis coming together. So Aon on the reinsurance side. These two firms have a 90% share of the broker reinsurance business. And so I think what you're going to see, and you're already seeing this trend, is investments made by a number of brokers in building out their reinsurance arms. And that includes McGill and Partners. You know, we've already got 36 colleagues across treaty and facultative reinsurance. More senior colleagues to come. Angus Milgate is joining us very shortly to spearhead our treaty reinsurance capabilities. Paul Summers arrived in March to cover our fact capabilities. And we've had about 25 colleagues join in literally the last 5 weeks in the firm, mainly, I might add, remotely. You know, what does the future look like? I think it comes down to making sure you can provide, continue to provide really world-class advice around structuring deals, around harnessing capital to meet the needs of cedents in particular. But from the McGill and Partners standpoint, I reference that, culture is important. Having a single profit center is vitally important for us. We have no silos in the firm. And, one of the key parts of our value proposition is in dealing with corporate clients, and particularly larger corporate clients, bringing our insurance and reinsurance capabilities together in a very open and transparent way to help meet client needs. And there are many exceptional solutions that are embedded in the reinsurance world or the retrocessional world that we are actively bringing right to the forefront of corporate clients, and it's having a significant impact. We've won, we're already representing 135 large corporate clients. The wins that we've had in the last couple of months have been very significant. Some extremely large, high-profile clients. And one of the common themes is the way McGill and Partners works across the entire firm to access the most effective capital solutions for our clients, whether they're corporate clients, whether they're MGAs, whether they're insurance companies or Lloyd's syndicates. And that trend we see is a trend that is going to be a key part of our value proposition going forward, and a real differentiator for McGill and Partners.
That's great. Well, unfortunately, that is all we've got time for today, Steve. Thank you so much for taking the time to speak to us. It's been a real pleasure.
Thanks, and appreciate the discussion, and wish you well with the virtual fireside chats and the virtual conference.
Thanks very much. Okay. And thank you to our viewers at home. Hope you've enjoyed this fireside chat and that you enjoy the rest of the day's agenda.